Hi everybody, today I'm going to provide an update on my stocks and unit trust portfolio, and I also want to talk about one defensive stocks that is currently in my watch list. First, let's take a look on the stock portfolio. Currently, it still have 10 Singapore stocks and 10 US stocks, and the portfolio is currently making a net profit about 2,000 plus, including 800 plus of dividends. Since 29th of May till now, which is slightly less than 2 months, I have increased my position on Nike, Realty Income, and for Singapore side, Parkway Life. This is a weightage of the 10 Singapore stocks on a portfolio basis, where Parkway Life and ComfortDelGro currently have more than 4% weightage, and CapitaLand, Ascender REITs, and OCBC have less than 2% weightage. The maximum target weightage per counter, I set it as 10%. So all the 10 Singapore stocks are still way below the maximum allocation for my portfolios. As for the US stocks, Nike and Realty Income, because I have add more positions, so their current weightage is slightly more than 4%, while Visa, as I have taken some profit previously, so thus their weightage now is less than 2%, and Bank of America, which also less than 2%, where I do a swap between JP Morgan and Bank of America during my previous update. So the total US stocks is also similar to Singapore stock. Their total weightage as a portfolio is less than 30%, and I still have more than 40% of money parking in cash, which is currently in the Sing dollar and US dollar money market funds. They are actually earning a returns around 3 to 5% per year due to current high interest rate environment. This is the stock portfolio performance since day one. I started this portfolio, which is January 2022. The stocks portfolio finally have made a profit from actually around May-June period, and I hope that this profit will be able to increase further down the road. This is the dividend chart. Since the portfolio has started as of now, the total dividend collected is slightly less than $900, and I will expect it to continue to increase further as I start to add more and more position into the current existing portfolio. In the near future, I may add in more counter when the portfolio value grow bigger. Now let's look at my unit trust portfolio. The unit trust portfolio have started to turn positive from June this year, and although currently you can see still have two negative funds, which is the FSA Dividend Advantage and the JP Morgan China, Greater China, which are actually the Asia fund. They are currently still lagging compared with the US side, where you can see the Infinity US 500 stock index are up 8%, and even the tech fund is the best performance, is up 13%. I may be doing a rebalancing of this unit trust portfolio sometime in August and September by introducing a bond fund inside, as the portfolio value have started to grow, and currently is a 100% equity portfolio, which is pretty risky. So I may want to bring down the volatility by introducing a bond fund maybe sometime in August or September. I shall update everyone once I do that rebalancing. The unit trust portfolio, although have been underwater, as I said, this year start to recover due to the strong growth, especially on the US side, especially on the growth stocks, the tech side. And the year-to-date return for this portfolio is 10.9%. And this explains why this portfolio have managed to turn over from negative last year to current positive positions. So this is a performance of this unit trust portfolio. You can see that it have been suffering losses since day one, and every month I'm doing a dollar cost averaging on it. And finally, it start to pay off, and we can see that the portfolio has started to turn positive in June this year, and hopefully going forward, the positive return can get more and more over time. And that's all for my portfolio updates. As my stock portfolio getting bigger and bigger, and I'm looking for opportunity to maybe to increase the current holding of 10 stocks for Singapore and 10 stocks for US, maybe to 11, or I may also introduce a Hong Kong stock into the portfolio in the next few months. With that task, I will have a list of stocks that's currently in my watch list, where I previously have talked about 3 REITs. So today I'm going to talk about one of the SG defensive stocks, okay, which is currently in my watch list. This stock is called Sheng Siong. It is a household name in Singapore and is one of the top retailer in Singapore, where it's doing supermarket business. Currently, there are mainly only 3 main supermarket players in Singapore. One is a commonly known NTUC supermarket. The other one is the Cold Storage Group, which include Giant and the third one, which is Sheng Siong. One thing unique about Sheng Siong compared to the other two is you were not able to find Sheng Siong supermarket in downtown area, inside the shopping malls. They are mainly in the suburban area where most of the people live, and they are currently in more than 65 locations across Singapore. They also have started to venture into China, where currently at Kunming, they have 5 supermarkets there. Although the 5 of them only contribute not more than 3% to the top line, which is the total revenue of Sheng Siong, and of these 4 of them are still in the red. With that, we can see that Sheng Siong is trying to grow overseas besides just stepping on Singapore market. The market cap for Sheng Siong is 2.4 billion. It is not a small company. It's considered under the bigger cap category. And their share price lately is trading about $1.60. And their financial data is pretty healthy. Let's look at their past 5-year performance. From this trend, you can see that their revenue, their profits is going up over the past 5 years. But one thing to do, take note, you can see there is a jump in their revenue and their profit in 2020, which is the COVID year. And this is because Sheng Siong have benefited from the COVID, where people have started to stock up more things during the COVID period. So that is another concern I have about Sheng Siong, is there is a surge on that, and this resulted in their net profit also have a surge. But I look at their gross profit margin have been steadily increasing. They didn't have a surge. I mean, the margin just slowly increased. And this has resulted them into paying more dividends, because first thing, you can see there's a big jump in their earning per share. And thus, they maintain their payout ratio is at 70%. So when their earning per share have increased, their dividend will correspondingly increase as they fix their payout ratio at 70%. And you can see that their dividend have from 3+ cents to go to 6 over cents over the past 3 years. This is a concern I have about Sheng Siong, is after the post-COVID is everything start to normalize. They don't have a surge in people start to stock up things. Would they able to maintain this type of revenues and this type of earning in during the post-COVID time, or will their EPS drop back to the pre-COVID level? If the EPS were to drop back to the pre-COVID level, that will be negative for the companies, and because that will result in their dividend cut, and that will be negative for the share price. But however, Sheng Siong will continue to grow over time, and their target is every year they will open at least 3 new supermarket stores in Singapore. And we can see that there is more and more HDB around Singapore and start to open up more places like even Tengah area. So for Sheng Siong to achieve that at least 3 stores per year growth, I don't think that will be an issue. And apart that, we are looking at China, but I think China will be a long-term play. Currently, they only have 5 in Kunming. They need to have a stronghold in Kunming first before they can expand to other China city. So that one will take it at the long-term play. It's just that we look at Singapore. If Sheng Siong able to maintain the revenues and continue to grow, then the share price should able to maintain and hover around this current level, and may even to appreciate more if they can continue to maintain their dividends, or can slowly increase their dividend further. Let's look at the share price performance of Sheng Siong over the past 5 years and compare to STI. So from this chart, you can clearly see that when during this COVID period, STI have plunged about 30%, but Sheng Siong share price, the initial knee-jerk effect of plunging, then after that have went up 70%. We can see that it over around this range, and currently it's around 160, which is a very strong support at this juncture. So this is where I want to monitor Sheng Siong further for the next few quarters of result to come up before I make any decision whether should I have a position on Sheng Siong or not. Let's look at long-term performance of Sheng Siong. If we were to happen to buy Sheng Siong at IPO with the IPO at 2011, Sheng Siong have actually delivered a 400% returns. Some of you say that because of COVID. Okay, let's put the COVID aside. Let's look at pre-COVID period. Sheng Siong actually already delivered more than 200% return before the COVID. And the COVID give you a surge another 100% return. When compared to STI, you can see that STI since 2011 until today, which is more than 10 years, it looks like STI have been hovering around sideways. There's no really much capital gain for STI over the past 14 years. It only appreciates about 14% compared to Sheng Siong 400%. And if I to add in the dividends collected for Sheng Siong, which in fact is increasing over years, the total return if we were to invest Sheng Siong since day one until today for slightly more than 10 years is 690%. So this is a pretty decent returns and consider that it is a defensive stocks and their business is mainly just purely on supermarket and is targeting the mass market. So all in all, I feel that Sheng Siong is a stock that I am considering, and I will also continue to monitor this stock for the next few quarters of their earnings result to see are they able to maintain their existing revenue after the COVID, or can even improve their revenue further, and also waiting for opportunity to include Sheng Siong into my portfolio. That's all I have to share with you today. So if you feel that this video has benefited you, do remember to like, share, and leave your comment below. And lastly, do remember to press the notification button so that you'll be notified on my next video. I shall see you on my next video. Bye-bye.